Joining us now is Robert Albertson, Principal and Chief Strategist of Sandler O'Neill. He says the slew of executive orders from the Trump administration are, quote, starting to appear like uncoordinated loose fire to investors. All right, uncoordinated loose fire, markets down a little bit today. Should we read into this as a reaction to some pushback, not only here but around the globe, to Trump, or is this just kind of a slowdown in markets?
It's too early to tell. I really think the power, the economic power that comes from this administration is enormous, all right? You've got an infrastructure program that could be 10 times as powerful as our last stimulus. And you've got very powerful moves already in business confidence, which literally shot up last month. We'll see tomorrow if it stays up, as well as consumers at a 15-year high. So this is the first time we've seen a business-friendly administration in a long time. The flip side is, can it deliver? And the appearance at the moment probably unnerves people because it does look a little uncoordinated. And we have to keep in mind the cabinet's not fully there. We still don't know who's going to be at the Fed and the empty seats and some of the financial regulators. So I think you're seeing a natural search for a bottom, getting the anchor down on the part of the investor. It is normal now to see a retracing, and I don't think that's necessarily over, nor do I think that means the good news is over.
You say government spending and business confidence are two powerful positives, but at the same time, the president has appointed a Tea Partier who's against deficit spending to run the OMB, who's got control over the purse strings. So how much can, for instance, the infrastructure spending that you were talking about really move the GDP needle?
Well, I mean, you make a very good point. Throughout the cabinet now, we basically see a lot of people who are impressive and also have differences with their leader who appointed them.
Quite significant. Quite significant.
So that has to play out as well for investors to get confident. The infrastructure spending, if you put numbers on it, at $1 trillion, however many years, that's about 6% of current GDP. Last time we did one at $830 billion in 2009, that was about 6%, but a tenth of it, barely a tenth of it was infrastructure. The rest of it was scattershot. So I think you can change the GDP numbers with this infrastructure spend if it's delivered and done properly, and no reason why it shouldn't. And then secondly, you see this business confidence at this level, you will then see spending. So by springtime, we're going to find out whether the business community is going to go back in and invest and grow. And then we wait a year before tax reform. That can't happen now. That's enough to get the numbers moving. That should move the needle.
You mentioned around springtime. I think timing is a very important issue here because, as Scarlett points out, as you point out, you've got sentiment indexes ticking up. You've got confidence indexes ticking up. One of those, I guess, slightly less sentiment-oriented, more action-oriented is CapEx plans when you look at companies starting to say that they are going to spend a little bit more on CapEx. Bloomberg does a good job tracking it. Morgan Stanley does a good job tracking it. When do you, as an investor, though, decide to get ahead of that? How do you know when that actually translates into either building a new plant or hiring more people?
Well, it should be easy this time because if you look at up until now, before the election, the momentum has been pretty steady across the economy with the exception of business spending. It almost collapsed for the last 3 quarters. So any turn up, however reasonable or small initially, is going to get translated into a, I see this coming. I don't think it takes a lot to get investors back on board that idea.
I want to get your thoughts on the bank's reactions to this Trump travel ban over the weekend. Goldman Sachs came out and actually stood for, was very firm in standing against it. Lloyd Blankfein putting out a statement, or actually telling everyone through voicemail, this is not a policy we support. I want to assure all of you that we will work to minimize such disruption to the extent we can within the law. And we're focused on supporting our colleagues and their families who may be affected. This is different than JP Morgan, which said, oh, diversity is good, but didn't express an opinion on the policy. Citigroup and Bank of America didn't even touch it.
Businesses shouldn't be commenting on this at this point because A, nobody seems to know what it really is, and B, nobody in the business community wants to see anything bad happen with immigration. The irony about our economy is that its sluggishness is primarily due to demographics. So the irony is if you loosen immigration in general, right kind of people, you would really have a big needle mover. That's not going to happen. But to try and parse these different CEOs and how they're reacting, they're trying to say something politically correct and calming. They don't know either.